Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 197 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, in the Presidential Library, Mr. AJ Brown. Good morning, AJ. Happy August 15th. How are you doing?
I'm doing well. I'm at my beach house. Like you said, the Presidential Library already had a chance to get out there and get some salt, so all's good.
Yeah, and we would assume that the market is a little bit calmer this time of year, but there's still a lot of activity going on.
There's a lot
Uh,
of
you know,
activity.
we did get some inflation numbers this week.
Mhm.
What are your thoughts? Where do you want to begin? Still kind of sitting here at these highs, and
Mhm.
trying to bump our way through there.
Yeah, let's jump in because it was a big news week. So I'm going to pull up the news calendar. So first of all, we got consumer price index. Let me go ahead and pull up my magic marker here. So we got our consumer price numbers. So this is retail inflation. And well, um, at first, and it caused a little bit of an uptick in the market. When you look at the high-end numbers, I don't know if you remember from a couple weeks ago, we talked about if we see 0.2, we're happy. If we see anything higher, we get a little bit nervous. So the consumer price index month over month, well, it was 0.2%. But when you look at pulling out the more volatile food and energy, right? So we know that food prices have been moderating a little bit and fuel prices have been coming down a little bit on the oil barrel. It doesn't seem to have trickled through to the pumps yet. Time will tell, but a couple weeks ago, OPEC went ahead and opened up more production. Uh, you know, bringing more oil on the market. So when you take out food and energy, that number starts to creep up. And some people notice that, but a lot of people blew it off, right? But now the next thing that happened was on Thursday. So yesterday, when we take a look at the producers price index. So now we're talking about wholesale inflation. Remember, there's this whole supply chain, right? And so the retail is the last bit of inflation. That's where, the store sells it to you. But throughout that whole piece, there's inflation, whether it's manufacturing something and buying the parts from somebody else and all of that good stuff. So when you start to look at the producers price index, well, these numbers are really creeping up. Look, 0.9. Remember, our threshold is 0.2. When you factor out food and energy, it's still 0.9. But then you factor out trade services, interestingly enough, it goes down, but it's still pretty high at 0.6. And then you look at things like services, right? And I keep emphasizing, right? I know that there's a lot of focus here in the US on things like manufacturing of goods. But in the US economy of 2025, the manufacturing of goods is such a small percentage of the US economy. Most of the US economy at this point is services. And when you see a 1.1% month over month number, I mean, that kind of gets people's blood boiling. And so that started to moderate the market yesterday. And then, of course, today, well, we had our retail sales numbers. I'm always interested in again, it's a very much consumer based, services based economy. So I'm always interested in the consumer and how well they're buying. And well, last month it was pretty good. It actually got revised higher. But this month we're starting to creep down. And when you factor out car sales, you know, retail sales is starting to almost stagnate. So I'm getting a little bit scared in that front. And also on the industrial production front, well, flat, right? Very little change in the amount that we're actually producing here. So, what is that big picture? I've given you all this data. What does it actually mean? It means that inflation does seem to be creeping up. And we saw with the employment numbers, although, some people are questioning those employment numbers, but we saw that employment markets are getting a little bit, you know, loose. This is not a good picture for the long term. Now, I know we're on this huge experiment that we haven't tried for about 100 years. The last time we tried to do a tariff based economy was 1928, 1929. So we're trying this experiment. So the data could be, you can't pay attention to month data, but this picture that's developing doesn't look good in the short to medium term.
And is this what most economists, or is this considered stagflation? Simply because I came across this chart here this morning. The jaws of stagflation are wide open, and does this lean towards, maybe a quarter point of a rate hike or a cut, but like not wanting to really do it, but having to do it because we haven't done it in so long, because the
Well,
inflation is not coming down, and we would really need it to come down a lot to kind of validate that, right?
yeah, so it's stagflation, absolutely. What that means is you've got the Fed with its dual mandate really trapped in a hard place because their dual mandate is to keep people employed but also control inflation. And they sometimes, most of the times, when you do one, you affect the other, and vice versa. They were on this nice path for a while where inflation was coming down, employment stayed tight, but now it seems to be hitting a culmination. And employment's starting to get loose. So when employment gets loose, you want to cut rates to get things sped up again. At the same time, inflation is going up. And when inflation goes up, you actually want to raise rates to control inflation. So you're in that weird period. In fact, take a look at some of our Fed numbers. So first, we've got our Fed Watch tool. I was looking at this morning. Now, a rate cut in September is just about a given, right? Last week, we looked at these numbers. Not much change. Last week it was about 88.9%. Now it's 91.7. Yesterday it was 92.1. So, what everybody who's got a voice says is that the Fed will probably drop rates. I mean, it's almost unanimous. It's like 9 out of 10, right? But now October, we're seeing a little hint that there might be a second rate cut, but it's kind of stalled with no rate cut, right? It's just recently gotten a little bit more aggressive, but if you look at it, it's almost like, 50-50 within the margin of error, and anything can change between now and the last days of October. And then in December, same thing, right? Whether or not we're going to have a second rate cut or a third rate cut, still on the fence. So definitely we expect a rate cut in September. Whether we get one in October or December or both October and December is up. We'll probably get a second one this year unless something goes off the rails. We'll probably get a second one this year, maybe even a third. And whether it comes in October or December or both, we don't know at this point. Because, with this new kind of experiment that's going on, we're living day to day.
Yeah, and it seems as if the tariff news continues to trickle in. Whether it's today I saw
Postponing. We postponed the deadline with China.
Yeah,
again.
and then this morning I saw a blurb, because you never know what to believe, of, oh, I may increase semiconductor tariffs to 300%. Now, I mean, that's a wild statement, but like, yeah, he would do it for like 24 hours for like 5 days and then, be like, oh, well, I take it back. So that is affecting the markets. When we look at the overall, indexes, it seems as if they're brushing it off, even though the signs are there. We continue to rally up to new highs. Are we starting to see a deviance in the different indexes, or are they all still continuing to move in alignment? Because I know yesterday, the Dow really took off with some of this United Health news that Warren Buffett took a big stake. I think the U.S. government might have taken or is considering taking a stake in Intel, and so I know the S&P hit new highs. What are your thoughts in terms of the overall market in these high levels? Did we get enough of a pullback for you to justify getting in? Because some of these big dogs are starting to load up their portfolios, it seems like.
I mean, I'm getting in, but for very short term swing trades, right? And we've talked about that. But if you're looking at the long term, well, let me just show you something. So I'm going to, my favorite determination of, are we about to see a little pullback is this little line here. This is the 3 and 5 day exponential moving average crossing. And you can see how just in the last 2 and then including today, 3 days, we've actually turned tail quite a bit. So I'm expecting actually a quicker top to be found than we have found over the last, well, since we started this trend in April 8th. So let me hide that again. Let me put some of my overlays on here that people like to see. First thing is our trends, right? And so here's an interesting thing about the type of analysis I do. We saw for the longest time a consolidation of this ascending channel, meaning that support and resistance were getting closer and closer together. Just recently, with this pullback at the end of July, and then the quick reversal back up, we actually wound up expanding our support and resistance. I don't know if you remember, about 2 or 3 weeks ago, we were talking about how price action was just loitering against the level of support. Now it looks like it was loitering in the middle of our channel. That's because we actually wound up expanding our channel a little bit with the pullback. Now, it wasn't an expansion of the channel because we did good stuff. It was that pullback at the end of July. And so now it almost looks like we're loitering against this new lower level of support. When you look at this, think about when we like to trade our sideways boring stocks. When we are looking at sideways channeling stocks, the ones we're really attracted to are the ones that consistently go to support and resistance. If you can imagine turning your head so that this trend right here was flat, what you start to see is, first of all, support, resistance, hanging out in the middle, a dip down to support, hanging out in the middle, a little dip up, hanging out in the middle, a dip down to support, and then you're maybe going up, maybe. In other words, this is not a healthy trend, whether it be an uptrend, downtrend, sideways trend. If you take the trend out of it and you look at the movements to support and resistance, this is not what you'd like to ideally see, which is the exchange of money back and forth between the different players in the investment market. So what this tells us is that there's still a lot of hype driving this market, a lot of, not actual tangible, but a lot of hype, a lot of rhetoric causing money to flow into the markets, especially when you think that data is telling you to take your money out of the markets. And we see that one other way when I take a look at my rainbow diagram. And I've emphasized this a lot, but every time we supposedly get a pullback from a top reversal to a bottom reversal, we come short of getting that necessary pullback to actually kind of reset and recalibrate for the next set of moves, right? So again, when you have only good moves up, but you don't have any time for markets to like reset and pull back, it means that you're pulling in money probably because people are, really suffering from fear of missing out. They're putting their money in because the market's at all-time highs. The people on the TV are talking about these top 10 stocks and how they can't falter. And this just gives me so much memories of what was happening in the 1998 to 2000, which resulted, that was the dot-com boom. This is almost like a complete textbook repeat of that dot-com boom. And we know what happened then from 2000 to 2004, 2005. It was the dot-com bust. So in the short term, SIP, I'm trading these swing trades in the up direction, but I am all planned out for a trend reversal down.
Yeah, and that's part of the beauty of using options and some of
Oh,
your
yeah.
option strategies where you're not necessarily trying to pick the direction, but some of the uncertainty. The next thing that I know we cover a lot, and I always want your take on, is the VIX, because that, it's been down here at these lows, and I'm like, I can't believe it, because to me, this is saying that there is so much uncertainty out of all the things going on that, I think you brought it up last week. A match could light a tinder on fire, and it could kind of send things that, spiraling back to, levels that we saw previously. What could that be? Could it be, economic news? Could it be something, in the global sphere? Is the global, like, democracy, diplomacy settling the market? Because it does seem as if, no matter what Trump is tweeting or putting out there, he does seem to be trying to get these countries to stop fighting with each other, which I think adds a little bit of level of certainty to the market. What's your big takeaway from the VIX and the levels and just everything that's going on?
Well, so I did this exactly. So I looked at the VIX leading up to two instances. I went back and looked at VIX data leading up to the dot-com bust. I mean, we have all this historical scenarios that we can go back and look at. I also looked at the VIX data leading up to the 2008 financial crisis. And sure enough, people were calm. And that's what, when you're looking at the VIX, what you're looking at is, as the VIX is low, and it's not incredibly low, right? Incredibly low is when it's hanging out around 12. But when the VIX is low, it means that we've got confidence. And when the VIX spikes high, like it did when the first tariff, you know, uh, all the tariff stuff happened in the beginning of April, that's fear and uncertainty and confusion, right? And so with the VIX being at its low, well, first of all, I'm going to urge everyone to look for the next signal on the VIX trades. People came back to me and they said, AJ, the VIX trade didn't pan out this time around. And I said, that's correct. What the VIX hedging trade is if the proverbial poop hits the fan. The proverbial poop has not hit the fan. And so the VIX trade came out this time. We talked about it about 3 weeks ago, breaking even. Great. But it looks like we're about to get another one of these blue arrows. These arrows are part of our indicator package that you could download from the Trading Trainer website. When we get another blue arrow with follow through, we're going to put another VIX trade on. And again, fingers crossed that it doesn't pan out. That means that the market continues to kind of go along in this cruise control that it's on. However, if the market all of a sudden, like I said, the proverbial poop hits the fan, that VIX trade will often, especially if you've been weighing your portfolio heavy towards swing trading. I'm actually starting to pull back from the swing trading because it seems like the trend reversal is closer and closer. So I'm pulling out of the swing trading, but a lot of even some of my premium sellers, I've gone back to. I'm like, how are your premium selling trades? Oh, AJ, I've slanted my portfolio towards swing trading. Well, I'm going to ring the alarm bell on you guys. You know, put your VIX trade in place and start thinking about putting more premium trades in place. Because if you're heavily weighted swing trading and the market reverses like it seems like it might in September, boy, are you going to get caught with your pants down.
Yeah, that's great advice. And if you want to know how to get in on some of those, protective positions, that's why we've got the quick links. That's why we've got your daily webinar. That's why we've got some awesome tools to help guide people. And so the link to AJ's quick links is in the chat there. So if you want to jump in on some of these premium selling strategies, and protect yourself. That's the beauty of the program Trading Trainer, AJ's approach to 20 years of options investing. Let's see. I was thinking of something else as you were talking. The tariff stuff. So this is, I don't know if people
Taco.
Well, it's like we're starting to get data on the effects of it and it trickling down, but this chart caught my attention, and this was just like, what have been the tariff rates over history? And they've been saying, oh, we haven't had tariff rates this high since 1920, and yeah, that's a pretty big jump in the last 6 months to a year. And I guess the quote here was, I thought it was pretty unique. We call it a tariff protection measure. It does protect, but it protects consumers very well against one thing. It protects them against low prices. And so inflation has been kind of creeping there. So we'll be keeping an eye on that data. But AJ, I feel like the employment story is going to become more important now that that's like more like people feel it a little bit, I guess, more realistic than the inflation numbers. And
I think, you know what, Sip? I think people, and this is just me kind of putting my fortune teller hat on. So, yes, things are costing more, right? And, we keep getting all these numbers from the US government that they're collecting all this money from tariffs. Well, the majority, a lot of that is coming, the corporations, the businesses are, eating it, meaning they're the ones paying for it in that wholesale inflation number that we saw earlier today. But at some point, and we're already starting to see it in the supermarkets and in the department stores, at some point it's going to start trickling through to the retailers. In fact, a lot of the companies during their earnings conference calls said, hey, we've been trying to eat as much as we can, but we're going to have to start raising prices. So prices are going to go up, and we're probably going to see it in the holiday season, right? Holiday season is one of the biggest seasons in the US for consumerism. And so if prices are higher, the consumer's going to get upset. But then I think the next reckoning is going to be next year, March, April, when people are preparing their taxes. People are expecting to see lower taxes, right? That's what they were promised. They were told, we may see higher prices because of tariffs, but you're going to get lower income taxes, right? Everybody's signing up for lower income taxes. That tax bill passed, right? It was signed into law. So we're going to see next April if people actually get to see lower income taxes, because that extra cost at the grocery store, that extra tariff tax, needs to be offset by income tax. Otherwise, you're going to be an upset population at the midterm elections, right?
That, and we got to roll over a ton of debt at a higher interest rate than normal. And I think that was kind of what the president
That's another little
was
black
chirping
eye
about this morning about that. I mean, he just does not hide his intentions. He's like, I need
No.
interest rates lower so that we can pay less on the debt, which it's good that he's thinking about that. Not sure if it's good to be so out there with it. I don't know. It's, that's this administration. Either way, whether the market's going up or down, whether Trump is golfing or he's in the office, meeting with global heads,
Or in Anchorage,
or heading out
Alaska.
to Anchorage, we here at Trading Trainer are always looking for opportunities, whether it's up, down, sideways, with the 29 different ways to make money using options.
I think 27,
27, 20.
28.
Yeah, I rounded up there. But
Here nor there.
anyways, the point is there's a lot of different ways to approach it, and that's why we have the show. That's why we broadcast. That's why AJ's got the community. That's why the mastermind session gets together every Thursday. It finds some winners. Some of those we bring on the show. Some of them we don't. But today we do have one for you. So stick around, folks. We've got AJ's pick of the week. We're going to dig into some examples. We've got our speed round. We've got some interesting names from around the country. So we're going to take a short break here. We'll be back in a few seconds. Sit tight, and we'll be back in a jiffy. But in the meantime, if you guys have any names that you want AJ to run through, feel free to throw it in the chat, and we'll get to them if we have some time.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ.
Sip, I was just looking at that picture of me all like trimming. I've got that goal of mine. I told my better half, I said, listen, I'm going to keep working out at the gym until my body percentage gets down to 18%. And until I do, I'm going to keep growing the hair. Now, she may win out. She's already saying that enough with the long hair and the beard, but I'm getting stronger. You guys might notice I'm bulking up a little bit. So we'll have to see.
Well, that makes 2 of us getting in shape. Hitting the gym is part of the equation. Having a good diet is another. At least I've been learning this as I've been getting older. So, hopefully you hit your weight and we'll get to see that beautiful face of yours here soon.
Yeah.
I do have a question for you that, before we dig into your pick of the week, because I saw a bunch of tweets this morning. But there was a bunch of news about these big portfolio managers taking certain stakes in certain positions, with the big one yesterday being Warren Buffett's Berkshire Hathaway taking a huge stake in United Health, one of the Dow components. But with that, there was a bunch from Michael Burry, right? The guy that they made that, I forget the name of the movie, where he predicted the crash, and then a few other. How often do these?
You're thinking of The Big Short, one of my favorites?
The Big Short, exactly. Yeah. How often do they release this information? Is that like a mandatory thing? And it's like, it was odd that it all came out yesterday, today. Is there like a logic behind that?
Yeah. These these big money investors, right? If you think about it, this is how the game is actually played. And I'm glad you're asking this question. A lot of times these big money investors, either in their moves in the market, right? Because when a whale comes along and actually does some buying or selling, it's quite apparent, especially if you're looking at order flow. I'm thinking of one of our guests on one of our past shows, Fausto. He loves watching order flow, and he can pinpoint when one of these big investors is buying or selling. And then if they come back and tell and make it known that they're buying, that causes, right, other people to feel confident to buy as well. But this is one of their sneaky little games. If they go ahead and buy United Health at this dollar figure and tell everybody, hey, I'm buying United Health, which makes people want to buy it too. They're like, if Warren Buffett's buying it, if it's good enough for Warren Buffett, it's good enough for my portfolio. So all these little guys come behind Warren Buffett and start buying as well. He wants that to happen, right? Or these other portfolio managers, they want people to pile on. They'll actually do moves in the market to get pile on, because what that pile on does is it raises the price. And then once the price is at a certain level, the whale gets out, right? So that's how you can, if you've got market moving capabilities, which a lot of these hedge fund, mutual fund, portfolio fund, pension fund managers do, is they'll actually cause almost a artificial, move that causes other people to pile on. It's called kind of a grand pump and dump, right? So they'll cause other people to want to, push the price up to the next level, and then they'll take their main uh, uh, trade out. So you have to watch for that as an investor, that you're not getting sucked in on that. But it reeked of that yesterday afternoon. It didn't just reek that, it didn't come off to me as, hey, we're very confident in the market. All of that news coming at one time got me really fishy. And again, it brings me back to 2008, when Citigroup, literally a few days before the whole financial market collapsed, was telling everything is great and you should be buying stocks. And there was this big, buy up literally 5 trading days before the big collapse. So that again, I hate to be the naysayer on this, or the contrarian, but I'm not buying it.
Yeah, and United Health has had its own issues, not only with lawsuits, but the murder of their CEO on camera.
Yeah.
The other big news was the U.S. stake in Intel.
Mhm.
Is that kind of a new concept? Because the more that I heard about it, I'm like, I don't know if that's the U.S. way of doing business. Like, we don't want the government getting involved in our, companies and whatnot. At least that's how I started to feel when I kept hearing the headlines. What were your thoughts on that news coming out?
Well, okay, so Intel, if you remember back to Biden's CHIP Act, which was signed into law, right? A whole bunch of money was put into companies to bring chip manufacturing back to the States for a couple of different reasons: job creation, all the usuals, but also because some of the chips that we want to manufacture are very proprietary, and we don't want, if something happens, for instance, to Taiwan, we don't want to have our chips that run all of our stuff, especially our secret stuff, our defense stuff, all of a sudden in problems. So when that CHIPS Act passed, all that focus went on Intel for some reason, not NVIDIA, not AMD. It went to Intel, which was kind of a company that, they make all the chips for PCs. Yeah, but PCs were the big revolution in the 80s and the 90s. Then we had the internet. Now we have AI. PCs is a couple of generations ago, but yet the US went double down money wise on Intel. Now, I think with this new administration, I'm just again putting words in their mouth because nobody really knows what's going on in their head, but they like, when there's money involved, they like to have a stake in the game. I mean, look at what's happening to where my other household is. They're like, we're going to take over DC. We're going to take over the universities. We're going to take over law firms. Since we're putting so much money into Intel, we're going to start specifying what the heck happens there. We're going to actually take a sharehold. We're not just going to give them money and let them fly, which I'm not sure is a bad idea, right? Some people are like, oh, but I'm actually thinking, we put so much money and we just throw the money at like EV chargers, right? Remember that Biden was going to create this network of EV chargers for EV cars. The truth is the Tesla network is still the best, and the that we put so many billions of dollars into it, and we didn't have many EV chargers show up. It all just went into planning, and it never the rubber never hit the road. Or what about when Obama invested big time into the solar companies, and then the rubber never hit the road? All the solar panels come from China, right? So the scoop is sometimes if you're going to throw money at a problem, maybe you need to also take a shareholder stake in the problem too, and kind of decide where the money should go, and not just let the companies do what they do with it, because there needs to be some accountability. So I think that's what we're seeing here.
Yeah, and when you put it that way, it doesn't sound so bad as when I was thinking about it. And I guess the last time we kind of did that in a major way was in the financial crisis, when the government took a stake in some of these banks, right? And they were like, "Yeah, we'll buy up some shares, and then I don't know what the clause was, but like in 5 or 10 years, we'll sell out of it or whatnot." But your breakdown makes a lot of sense and makes me not feel so the government stay out of our natural resources and stuff like that.
I just feel like there's also that high speed rail between LA and San Francisco. I mean, I hate to you know point out all of these big failures of kind of these great ideas, but you can't just throw money at something, right? Because it gets wrapped up in legal battles, it gets wrapped up in profit taking, it gets wrapped up in a lot of things, and then the rubber never hits the road. We never get what we're promised, and that kind of erodes people's confidence in the government being able to sway things. You can't just throw money, you have to also throw expertise.
Yeah, and that's funny that you brought up the real high speed rail, because Elon Musk just tweeted this morning that they're doing it in China, and he was like, "Oh, it looks like a good idea. Maybe we should do this in America."
You
Kind of
know,
like in a jokingly manner, but it also like, yeah, this guy did try and do that. Um, all right, well, that's on the news front. We've got a lot of stuff out there. The Alaska situation should turn out to be pretty entertaining. No, I mean, not really have an effect on the market, but like it's kind of like interesting to have some warlords getting together to discuss, peace.
I think it's more of a chance for Russia to not, Russia has been under a lot of scrutiny around the world after they invaded the Ukraine about 3 years ago. And now I think it's a chance for Russia to actually talk to somebody about, hey, what if you remove some of my sanctions? What if you remove some of my limitations of my oil? So I don't know about that. I'll tell you, can I change the topic on you?
Hey, it's your show.
Well, what's interesting to me, I don't know if you guys have been paying attention to Spirit Airlines. Spirit Airlines just kind of came out of bankruptcy. Do you remember when we were talking about Frontier versus JetBlue, merging with Spirit Airlines? This was back almost 100 episodes ago.
Yeah, and then I think coming out of bankruptcy, they did a big reverse split of some reason, because they were trading at like under $5 for a long
And they were
time,
trading in penny stock status.
and now
But
they're like 300 plus. But I didn't know they came out of bankruptcy. What's the story there?
so Spirit Airlines, if you remember, and I was so surprised, JetBlue made a big. If you think about the model, the Frontier offer for Spirit Airlines was probably the better fit, because Frontier's model, that kind of budget economy, kind of goes along with what Spirit, whereas JetBlue is more of a select destination airline, and they've got, they kind of focus on the more premium at a budget price versus just being a budget airline. So it would have made more sense for me for Frontier to be the winner, but JetBlue was the winner. It doesn't matter who the winner was, because it was blocked for antitrust. The merger never went through. JetBlue never got to merge with Spirit. Spirit wound up going out of going bankrupt. They've emerged from bankruptcy just barely, but they are already saying that they're not going to survive the year. I think Spirit's going away. It's going away catastrophically. I think all of its components will be sold off through the bankruptcy courts. And I was watching, you remember at one point we were looking at the Jets ETF. This is kind of an ETF that focuses on the airlines. I've got it pulled up on the chart here. It had this spike when Spirit announced it, because I think all the other airlines are excited to take over Spirit's routes, right? And to take over Spirit's, assets at bargain basement prices. They're probably selling off Spirit at like pennies on the dollar. The Jets popped up the minute that Spirit made that announcement that it's probably not going to last the year. So I'm going to be watching that carefully and seeing which airlines, we like selling premium on airlines, but if any of our premium trades, one of the benefits of our premium trading strategy is that it can quickly be adjusted into a directional trading strategy. We're going to watch that carefully to see which airline or airlines is the winner and how can we profit on it from the options standpoint. So you guys should stay tuned to our future shows on that. I'm going to keep an eye on it for you.
Yeah, I as a consumer, I have stopped using Spirit a long time ago, and I don't know, it may be a good thing for the industry because they are that model is very deceitful in the sense that they always have the cheapest tickets, but then there's all these upsells with everything else. So
everything. Oh, you want to wear shoes? Oh, you have to use the restroom while you're on the airplane? That'll be $5.
Yeah, just kind of a different experience. So to see some consolidation there, I won't be mad at it.
I mean, there's been so much. The airlines are just if people remember, you had Eastern, you had Northwestern, you had Continental. There's been so much consolidation, but there can probably be a little bit more. I mean, I remember Pan Am, but it's a very fluid sector of our economy is airlines. Things changed a lot.
Trump Airlines, I think that was the thing for a while.
Yeah, Trump Water, Trump University, Trump Beef,
Trump watches, Trump shoes,
Trump coin or whatever, Melania coin.
All right, cool. So let's dig into some opportunities. Let's see if we could find some setups to get some return on these wonderful ideas. Let's go ahead and start with your pick of the week. You're liking JD.com, ticker symbol JD. Looking like it's not doing much, which is great for what you like. What's the setup here?
So JD, this is a China play. They're actually doing a couple of things. They're pushing an app it's basically like an Instacart app or a Uber Eats app. And it's doing pretty well in China. Here's what I want to do at JD.com. I want to just raise the awareness for folks about this because I actually want to get this on the downside. So I don't want to get it right now. We just got this signal. We didn't really get follow through on the signal. This is for a bottom. I actually want you guys to just watch this because I'm looking for the next top around $34. If I was looking at this a few weeks ago, this top with the follow through on the 29th probably would have been the best bet. I'm looking for the next one of those moves right here, right? When I see that, I want to go against JD.com. I want to short this stock. I want to short it in lots of 100, or there is a substitute option. The JD.com has a very healthy options chain. If you are using our free lookup tool, you've signed up for the free lookup tool, you can see that there's all sorts of expiration dates. There's all sorts of strike prices every dollar. It's a very healthy options chain. A lot of people are trading the options, which means there's lots of liquidity. I found a $42 right here, this guy right here. This $42 put would be a great substitute for the stock. So instead of shorting the stock when we get that top signal, I could also see buying this JD March 2026 $42 put. It's only going for $11. That's in contrast to the stock itself, which is trading at about $31. So you get it for about a third of the price. Brings in a little bit of leverage, also makes it into a cash trade instead of a margin trade. So again, not going to trade it tomorrow or anything like that. I'm going to wait for it to bring itself back up. And that's when I want to either short the stock or buy that put option that I just found and then let it fall. And if you let it fall, a shorted stock or that put option is going to appreciate in price. And there's a pretty solid level of support around $31. If it falls from 34 to 31 and then starts to bottom out, that's when instead of selling call premium, we want to sell put premium and buy a protective call, probably with the strike price up here at 34 or 35 bucks. So again, it's kind of a longer play. This is going to be one of our income trades, and I want to slant it to the top side because there, in my mind, some of the research I've done, JD.com could actually, see some downward movement, and it being in that either put option or shorted stock would be beneficial in the long term if we get a surprise move to the downside. So that's kind of my thoughts on JD.com.
All right, JD.com, ticker symbol JD. Not the first time that we've brought it up on the show. As you can see, definitely likes to find those support and resistance levels, which are great for your setups and specifically, some premium selling strategies. So there you go, folks. AJ's pick of the week, JD.com. We've got 3 other names from lovely folks all across the country. AJ, we've got about 8 minutes. Let's see if we can run through them and give some good advice. Starting off with Tanya out in Rochester, New York, interested in what's happening in the burger world. Ticker symbol or Wendy's, ticker symbol WEN. There's a lot of chatter going on in the fast food space these days, I feel like.
We were a big fan of Wendy's when we first started this show because it was in a nice sideways channel. It was trading around somewhere between $15 and $20. We were selling premium on it. And in the last year, Wendy's has kind of sucked it, right? It had some down movement. And I know a lot of people who shorted Wendy's or bought, directional put options, and they're very happy with their trade. But, we're seeing in the short duration, this little move up. I'm going to tell you to be careful about that. I'm not sure if you're thinking about trading this as a premium trade. What I like to see for premium trades is that levels of support and resistance are tested at least twice. So if I got some squigglies here. If I am wanting to see if this $9.75 is truly support, I would see it bounce up to 12 and back down to 9.75, and then I would think about premium trading. But there's something else I may want to bring your attention to, and that is this glorious downtrend. A lot of people think of swing trading as you have an uptrend and then the stock pulls back a little bit and then swings up. The same thing can happen with downtrending. So this little move, and it's actually happened with Wendy's a few times. You can see where it goes up against the downtrend and then swings down, up against the downtrend and then swings down. I would look actually, do all the stuff that we've talked about in the last couple of shows, but do it in reverse. Look for a leading indicator to say that things are overbought, and then look for a lagging indicator to give you your entry and exit signals.
Yeah, and $10 is a pretty important psychological level, so that could have some longer term ramifications. But yeah, I think they've been dealing just with consumer slowdown, inflation, things of that nature. I know that Sweet Green isn't like burgers, but they've been getting hammered in the space, and they had earnings this week where they kind of talked about consumers not wanting to spend the money on stuff. So we'll keep an eye on that. Thank you, Tanya. Moving on to our second name, Bill out of Philly wants to know your take on ING Group, ticker symbol ING. This is a banking play, right?
Yeah, yeah. In fact, they're a Netherlands bank. That's why they spell group funny. Um, they're a Dutch bank that actually it's one of those you can get an online account with them, and it's a high interest yield. It's a great place to store cash versus your traditional like Chase or your local bank. And a lot of times with the Ing Bank, you can get some of those deals where they pay your ATM fees and stuff because they don't have as many. So that's Ing. Ing is doing well. It's not a premium trade, but it is a swing trade. And so here's what you want to be thinking about. Here's where it looks like the trend starts. So if we throw ourselves on a linear regression line, that's just nerd speak for best fit trend line. If we start from our lowest close, which is right here, and bring it up, there's our trend. And then you use something like a Williams percent R to know when you've pulled back. And then you use something like a simple moving average, some sort of lagging indicator. So with swing trading, combine a leading to give you the trigger, and then combine a lagging for your entry and exit signals. And that's the match made in heaven there. So it looks like, to be honest, we missed our opportunity for the latest swing trade. Here's your lagging signal after a pullback, and we haven't yet gotten the exit signal. So you've missed that opportunity because it was trading. We got follow through around $23.50. It's already $1.50 higher. If you would have leveraged an option on this, you could have easily made 25-30% on your money. So patience, right? Wait for this to give an exit signal. If you're using our fast MACD signal, you'll get a magenta arrow. That's the exit signal. Wait for your leading indicator, like the Williams percent R, to reload. In this case, it would tell you that things are extremely oversold. And then wait for the next cyan indicator and buy, and then magenta sell. That's a swing trade right there.
In a boring name that does something that we like to look at, although it doesn't look so boring the past couple of months. So they must be doing some things right.
I'm curious just what it looks like. Yeah, I think they're doing okay. It's a good bank.
All right, thanks for that, Bill. Hopefully that helps some of your analysis. Moving on to our third and final name, Doug out of Austin, Texas, wants to know the story in Cisco Systems, ticker symbol CSCO. Looking like some chop the past couple of days.
Well, they reported their earnings. It wasn't necessarily bad, but investors interpreted it as not as good as it should be. It was better than it has been, but not as good as it should be, given all the investments Cisco is trying to do on the network side for AI. Okay. I think this could become a premium trade if you've got the portfolio to support it. And if you don't want to do the type of premium trading I'm thinking about, you could use vertical spreads and get yourself into some sort of condor or iron condor setup. Just be aware of the risk involved with vertical spreads. I think vertical spread trading is one of those type of trades that folks underestimate or they don't give the amount of risk that's involved in the trading credibility, and they do large position sizes and then wind up, wiping out their portfolio very quickly. So keep that in mind. But this is, let's watch Cisco and let's see if this level of support around $67 holds. Remember, I just got through saying I like to see support tested a couple of times. If support around $67 holds and we get a nice confident sign of a reversal up, I would buy some Cisco. In fact, let's see if instead of Cisco, we could buy a substitute option. It's easy to do. It's easy to find out with our options lookup tool, CSCO. We want to go out a healthy amount, looking at the March series in March 2026 or even June wouldn't be a bad thing. I said that funny, June. And then here, let's take a look. With this little setting here, this makes it really easy. When I look at price components, to find a good substitute option, you want your extrinsic value to be less than 5%, but you also want to make sure there's liquidity, which there's plenty of liquidity. I'm looking at this $50 call. So instead of buying the stock for $69.30, I'd buy this $50 call, and the $50 call is going for $20.23. So it's a third of the price. Again, pay attention to that leverage because there's more risk involved with leverage. Don't oversize your positions. But yeah, let's watch Cisco. If it verifies that 67, even as low as 66 is our bottom, and it starts heading up, let's go long some Cisco. It doesn't, I'll be honest, I've traded in and out of Cisco for the last 30 years. It's not a bad stock to have in your portfolio for the long term. And you can do all sorts of premiums when it stalls and keep it profiting for you. So I'm all for letting this earnings, fail in the investor's eyes, even though it was positive for the company. This earnings get into the rear view mirror. If we hold out at 66, 67 and start moving up, let's go long some Cisco. And then let's look for opportunities to either let it ride or sell premium when it starts to top.
Yeah, Cisco's always been a weird company because everyone knows the name, but nobody really knows what they do other than
they keep the internet running.
Technology stuff like servers and server racks and cables and things like that.
Yeah, they're networking. They're networking, but they literally Cisco. Remember, I said Intel was all about the PC revolution, like in the 80s and 90s. Cisco in the 2000s all the way up to the 2010s was the whole internet revolution, right? That was the company to watch. So, yeah.
And they helped us get here. 2025, the AI revolution. All right, AJ. Looks like we're still getting a bit of a pullback in the market here to head into the weekend. What are you looking at? I mean, today is option expiration, is it not?
Yeah. So I'm looking. First of all, I'm going to go ahead and options settle this evening, Saturday morning, tomorrow morning. So I'll be looking to see, how many of my trades cash out, where I am. So take inventory of your portfolio when big changes like this happen. If you expected, make sure things expire correctly. You close your positions today if you need to. And so there's going to be a reckoning. So check that out. And then, I'm already thinking about September premium. I'm thinking about, the summer doldrums will be coming to an end in 2 weeks. I'm thinking about our 200th episode of our show coming up. So, yeah, these are the things that are on my mind.
Yeah, and we'll definitely be keeping an eye on what's happening with this Alaska trip. I don't know if that's happening today or this. It's just, more of in the headlines shouldn't really have an effect on the markets. But we are still kind of at these highs, so you never know when some news could come in to push us higher. Yeah. With that, once again, I want to give everyone a reminder that the access to AJ's quick links is in the chat. This has got all sorts of goodies. We've got all the social links. We've got access to the free indicators. You may have seen AJ working with the options lookup tool, which is going to be on a whole new level here in the next couple of weeks.
A lot of new user interface coming, folks.
New experience and
new data being mined. So there's going to be a lot more things you can look at.
And some initiatives on getting you guys, more seamless integration of that information to whatever strategies or things you might be doing, or just what the trading trainer community is doing on a week-to-week basis to use this tool in making some of those decisions. We got access to the workshop, more about the program, some custom coaching information, all the goodies here on AJ's quick links page, which is in the chat. AJ, you're at the beach house. How's the weather? You getting out there to hit the waves?
Mm-hmm. You betcha. We're planning to go every day down to the ocean. It's beautiful. Some of the kids are already back to school, so that means the beaches are getting a little bit not as crowded, and I love not crowded beaches. So yeah.
Yeah, we're going to be closing out these summer doldrums here in the next 2 weeks, and September should be shaping up to be a very exciting month. At least historically it has been. Hopefully we've got some great strategies to set you guys up for success. I believe that's all we've got for today's show. Once again, feel free to show some love. Hit that like, hit that follow, hit that subscribe button. We do appreciate it. AJ, thank you for your time today. Thank you to everyone for joining us. That's all I got on my end. Final words?
Take care, everyone.
All right, folks. We'll see you guys next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.